Everyone gets excited about buying property in Dubai. They ads show shiny towers, dreamy pools, and payment plans that sound easy and flexible. But here is what most people don't realize. The payment plan you sign can make or break your investment. You could end up paying on time while your building stands still. And that's the trap we need to talk about today. Let's be clear. The most dangerous type is the date-based payment plan. It's written in the contract like this: 10% now, another 10% in 3 months, another in 6 months, and so on. Sounds harmless, but here is the catch. Those dates keep coming whether or not the project is moving forward. If the developer delays, you still pay. If the site is stuck for months, you still pay. And if you miss a payment, you get hit with penalties, sometimes even risk losing everything you've already paid. Imagine draining your savings for years while your future home is nothing more than a construction fence and a pile of sand. That's not investment, that's a financial trap. I'll tell you a real story. An investor I know bought into a project in 2021. The plan was calendar-based. By year 2, he had already paid over half of the property's price, but when he visited the site, it was still just a skeleton. The developer was delayed, but his payment notices kept arriving every quarter. He tried to slow down, asked to wait until progress was visible, but the contract said no. The choice was simple: pay or face fines. Eventually he ran out of cash and had to resell his contract to another buyer at a big discount and walk away with a loss. The project itself wasn't bad. The mistake was the plan he signed. Now let's talk about the smarter option, the construction-linked payment plan. This is where your payments follow real progress on the site. For example, you pay when the foundation is complete, then when the structure is finished, then when the building is nearly ready. If progress slows down, your payments slow down too, and that's fair. That way, you and the developer share the risk. They only get your money when they deliver something tangible. It's safer, it's fairer, and it keeps the pressure on them to build, but not just to collect. So how do you make sure you don't lose money on payment plans? Here is a quick checklist. First, post-handover payment plans. They popped up during COVID to lure buyers, and developers still use them. Sounds great when you have a ready property and continue paying its price from rental income. But here is a catch. If the plan is tied to fixed dates and the handover date is shown as a guarantee, be careful. That's not a real post-handover payment plan, it's just a stretched out payment schedule. Second, always compare prices. Developers often add the cost of those delayed payments, post-handover payment plans, into the launch price. So check what similar projects in the area are selling for. If prices are inflated from the start, don't expect quick appreciation. Third, look for milestones, not dates. Payments should follow actual progress. Foundation done, some exact completion percent is reached or finishes in place, not just 3 months after signing. Fourth, make sure the big payment is at handover. A safe plan keeps 30 to 50% due only when you get keys, but not 10 to 20, what developers tend to do now. That way, developer has a real reason to finish on time. Fifth, make sure developer has an escrow account. In Dubai, money should go into regulated escrow account, not straight into developer's pocket. That protects your money. Sixth, check the developer's track record. Did they deliver on time before? Did milestone payments actually match construction progress? This really matters. And finally, think about resale. With date-based plans, payments pile up quickly and selling midway gets tough. Milestone-based plans are smoother, easier for you, and more attractive to the next buyer. And again, a proper post-handover payment plan means installments spread after handover, without rigid fixed dates. That's the kind you want. Here is the golden rule. If you see a plan where you are paying most of the price before the building even stands tall, think twice, and if you doubt your financials, walk away. That's not safe. So here is a takeaway. Don't let the excitement of Dubai's property market blind you. A payment plan isn't just a schedule, it's your safety net. A calendar plan can drain your cash while nothing moves on site. A construction-linked plan ties your money to real progress. One protects you, the other traps you. If you want peace of mind before signing, book a call with our Whiteville specialists. We'll review the contract line by line, explain the risks, and make sure you don't lose money because of one small clause in a payment schedule. Link is in the description. And don't forget to subscribe, because in our next video we will break down the best and the worst areas to buy in Dubai. You'll see which districts are hot, which ones are hype, and where your money actually works for you. Till next time.